We're back with the changes coming to your 401k and what you need to know before you invest. President Trump signed an executive order last week allowing Americans to start investing their retirement savings in private equity, cryptocurrency, real estate, and other alternative assets.
The president says it'll give retirement savers more opportunities. Some financial experts say it poses much higher risks that far outweigh the potential rewards.
Here to break it down for us is NBC News business and economy reporter Emily Lorsch. Emily, good morning. Thanks very much for being here. So just walk us through first this executive order that President Trump signed last week. What does it mean? How can you invest in those other things like real estate with your retirement savings?
So those currently saving up for retirement, thinking about that nest egg and being able to be comfortable once they decide to retire, currently have a wide range of options of where they can invest those retirement savings. That includes stocks, bonds, mutual funds, index funds, money market funds. And so this executive order really opens up the options here. It would pave the way for people to be able to potentially invest in private equity, cryptocurrency, real estate, commodities, and other alternative assets. Now, this is a big win for some of these industries because now they'd have access to some of the $12.2 trillion that Americans currently have in retirement savings. Of that, about $9 trillion is specifically in 401k plans. So, asset managers, for example, are really optimistic about this and calling this a big win.
But it's clearly not for everyone. I mean, what should folks know?
It's definitely not for everyone. Certified financial planners we spoke with basically are warning against this. They're a bit nervous that some people are going to think that the wins here could be really big. Private equity is known to be very lucrative. However, it really depends on your financial circumstance. They warn that you should talk with a professional, a certified financial planner, get advice about your particular situation before you decide to invest in some of these more riskier investments. And one CFP I spoke with actually said currently when she's talking to some of her high net worth individuals, even if they're interested in investing in private equity for their retirement savings, she flat out says to them, are you ready to lose 100% of this? Tomorrow, if I find out this is all gone, do you have enough in retirement savings that you're going to be okay? If that person says no, she says this is not an investment that you should probably make. Take a listen to what she had to say.
There is a reason why they are called alternative investments. There is a reason why we have certain regulations currently in place that did not allow this in 401k plans. And even for outside taxable accounts, you have to pass through certain requirements for you to be able to get invested into that. I am concerned. I am concerned for our investors who don't quite understand what this might mean and impact them. And they think that because it is being allowed that they should do it.
What are the other downsides beyond that, Emily, to investing like this?
Typically, these types of investments come with higher fees, limited liquidity, and also a lack of transparency here. So in terms of, for example, lack of transparency, when you're, looking at a stock, for example, there's a real-time price, there's a ticker. When you're investing in a private company, there's not that real-time price, and you're not able to get the same information that you're able to get publicly available for a company that's traded publicly, that's on the stock market. Also, if you're in a pinch and you need to pull, you're getting closer to your retirement age and need to pull from your retirement savings, it could be more difficult to sell these assets. So certified financial planners definitely warn that you need to figure out whether or not this is a risk that you're willing to take before you go ahead and invest in one of these alternative assets.
One person you spoke with said this could result in, quote, a massive train wreck where many people are seriously hurt. What do they want to see happen to protect investors?
They're really concerned that people are going to hear about this and say, oh, wow, I can get some really big returns. Now, that's not the case for everyone. And even if you are someone, maybe a high net worth individual, there's no guarantee that you're even going to see those big returns. So they're saying, first of all, education. Free education, free awareness, free resources so that everyone, regardless of your personal situation, is able to really grasp your head around what this is, what the risks really are before you decide to invest in one of these alternative assets. And then also limits and safeguards. Some CFPs suggested to me maybe people are limited to only 5 or 10% of their retirement savings can be invested into one of these alternative assets. Also, free financial advice. Of course, as we know, not everyone has access to a professional financial planner or someone who really could break down the risks for them, and an increase in transparency.
All right. Emily, thank you so much.
We thank you for watching, and remember, stay updated on breaking news and top stories on the NBC News app or watch live on our YouTube channel.